Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Darrell Thomas, and today we're meeting again the good friend of mine, Bubba Horwitz. How you doing today, Bubba?
I'm doing great, Darrell. How you doing, brother?
Doing good, man. Doing good. You know, obviously the bloody markets is something that's been hurting my portfolio, and I'm sure people watching, that have been holding shares throughout this time may be under some pressure as well. But obviously you come from like a trading perspective, and so you're making money on the way up and the way down.
That's true. Again, I'm always, just so everybody knows, I'm always long the market in general, right? My investment account is always long. Now I hedge, and I actually teach people how to hedge their portfolio because I know that my max risk is about 4 or 5% to the downside no matter what happens. And I continue to accumulate longs with the money I make off the hedge. But from a trader standpoint, I trade either side. And of course, I've been short coming into this over the last couple of days because the markets were starting to peak and it looked like it was time to be short these markets. And of course, I took a short side. Now, again, when you're trading, you also have to just define where your risk is going to be and where you're going to get out. I mean, at some point, you're not always going to be right. So you have to know before you put that trade on, what is your risk tolerance? What is the risk versus your portfolio versus what you're trading? Because you never want to get over leveraged in these markets, because the one thing that leverage creates, it creates you to force you to do something that you may not be ready to do.
Yeah, agreed. And, one thing, like I've done a little bit of trading, and, you got to know your maximum downside risk and all of that. And so yes, it's definitely a lot of skills there that I think investors can use. So what's kind of your current outlook on the market? Is this just like a correction? Do you think we're going into a bear market crash? What's kind of your assessment of the market?
Well, my opinion it's been for quite a while. I think we're going down 40 to 60%. Okay. I think there's too many warning signs out there. I think the markets have too many troubles. I think you've seen, too much focus and too much overvaluations, and we're now entering the earnings season, which the expectations are gigantic, 23% year over year. I look at the debt, credit card debt, 15% of the population is 90 days past due on their credit cards. 7% are defaulting on their cars. 6% are defaulting on their mortgages. Now we have, once again, we're back to that no doc loans, stated income, 0% down. Does that sound familiar? To me, those are all dramatic warning signs telling me that in the housing market, the builders are in trouble. Inflation is too high. Production is not enough. Jobs are going away. So we got a whole bunch of stuff that isn't very good. And it doesn't mean that the market won't go higher. Again, I don't really think that that's the automatic, but certainly at this point, you can see the NASDAQ is now just broken down through some pretty key support. So let's see how it plays out from here. Okay.
And so do you think that with that in mind, that it takes a lot more to kind of keep these markets elevated at these levels? I mean, it seems like the CapEx with AI, like the expectations, like you mentioned, like coming into earnings season, the expectations of bigger numbers, being printed or more billions being added to this AI, build out and such. And it seems like the expectations just keep growing. And at some point, the steam runs out of that, right?
Yeah, I mean, you can't keep overvaluing stocks. Again, valuations are very tricky, okay? It's just like PE ratio. You say a stock's PE is 6. Is that high or low? Well, if the industry standard is 3, then 6 is high. So we are in pretty lofty, elevated times. And you just watch what happened with SpaceX, which opened, went to 250, and now it's trading at about 120. So, we get to these valuations where they just cannot be supported. And of course, unfortunately, we've had extremely low volume. The markets have been struggling, to find players. And I think that the commercial and the industrial trade has been on the outside waiting for a chance to sell. And I think we have to watch for volume to pick up first, and also watch the volatility index. Now we're getting some volatility today, but overall, again, to me, this has been nothing more than a retail rally. And I think the big money is waiting to really pound into this. So we'll see how it plays out.
Okay. Got it. So you mentioned 40 to 60%. I mean, that's a hefty haircut right there. So are you seeing all sectors being hit to that degree? Or are you just seeing mostly like tech?
I think the general market is just going to fall apart. Again, it'll start somewhere. I mean, it's already started with a lot of the lower end computer stocks, AI stocks that aren't fully funded yet. We started to see some movement into the industrials, into the Dow, which is not a bullish sign. It's more bearish than anything else. But eventually they'll all start to fall. Now, the other thing is that stocks will also find bottoms at different places. If we go back to 2008, you look at Amazon. Amazon bottomed in November of '08. It was at $30. By the time we got to the actual bottom of the market, it was $60 in March of '09. So again, I think you have to play if you're playing individuals, then you play the individual issues and look for opportunity on either side of the market. If you're playing the indexes, okay, the same thing. Okay. Now the indexes are a little bit safer play because they're not as affected by an individual news item from any stock. So if I were going to recommend somebody to trade, I'd trade futures in the S&P, Dow, NASDAQ, and Russell, or I'd trade the 4 major ETFs, the SPY, the Q, the Dow, and the NASDAQ. So that would be what I'd be looking for. Again, now those are easier to trade. They're more liquid. They give you more opportunity, and they're not as affected by the individual.
Okay, so you said that movement into the industrials and the Dow is bearish. Why is that?
Well, typically that's considered. When it was really an industrial average, it was considered the safe haven play. That's where money went when they were looking for more safety. The risk on, risk off trade, which is a bunch of horseshit, but risk on, risk off. But that's where people tend to go to. And if you go back and look at the difference, I mean, just a quick number you can look at right now, the Dow in futures value is worth 270,000. The S&P is worth 380,000. So the spread is about 110,000. If you go back to '08, the Dow was actually at the bottom of the market. The Dow was worth more than the S&P. So that's where money flows when there's a little bit of panic, and you'll see it come out of the S&P and go to the Dow first. And then when everything falls, then they just all fall. But typically, if we get that sell off, the S&P is going to fall. The S&P and the NASDAQ are going to go faster than the Dow and the Russell.
Okay, so energy seems to be holding up pretty well. Obviously, disruptions with the war with Iran. What's your view on energy at this point?
I think energy is a sale. I think, listen, this war stuff is to me is laughable. But if you look at it, now let's go back. Every time when the war first kicked off, crude oil ran to 120. The next time there was an issue, the crude went to 100. Now it's at 80. So with the glut of oil in the world, with the glut of oil in this country, okay, you already have Saudi Arabia selling China undervalued because they have so much. They don't know what to do with it all. So they want to turn it into money. And that to me tells me that I'm a seller of crude, have been a seller since it's been 100 and will continue to sell it. I think it's going into the mid 50s. Wow.
That's pretty low. So you think that these equities related to crude and energy do you see crude being like a longer term play, or do you just see it being like it just needs to be in the 50s for a while?
Well, I mean, crude oil just needs to go down. Now, the equities are a different story. They've made a fortune, and we've already seen some of the earnings come out, and they've been record earnings, Shell Oil and others. This whole pricing model at the retail level has been laughable. It has not nearly come down as fast, okay, as it should have compared to what oil has done in the past history. So the oil companies have made a lot of money holding on to this. And we'll see this finally come down too. But at the end of the day, the last time crude was 80, gasoline at the pump was a lot cheaper than it is today. And this is one of the problems, which is why their profits are going to be very, very high for this quarter. I mean, anytime you're in energy companies are going to be fine. But again, we are going to see some switch. The economy is bad. The oversupply is bad. So where can prices really go if you look at the simple supply demand curve?
Yeah, definitely. So I'm interested in your thoughts on this, which we don't have to go deep into like the Iran situation. But I remember when we had the first ceasefire, President Trump said it'll be good to avoid like economic disaster. And then now we're back in like a kind of like a hot situation, hot war situation with them. Do you think that economic disaster could come from this conflict?
No, I don't. I do not think economic disaster can come in. I think it's just a pain, and I think that President Trump has played this very poorly. I think, look, if you're going to do this, then you need to just take them out. Okay, you need to end this because you're never going to get a true arrangement or a true agreement there. So if you're going to do it, you have to do it, and that's where I come from. But economic disaster, it's not. There's not enough there to create an economic disaster for us.
Okay, got it. Not, I totally get what you're saying there too. With like you're not necessarily going to get an agreement here because like it seems like the more like some folks over there, I forgot the name of the military, but they still want revenge. So it's like you come in, you kill our leader, you assassinate our leader, and then you expect us to come to an agreement, right? And so it's kind of seems like that's probably past the point of no return. I'm not sure, but I'm not a geopolitical analyst. But
well, I mean that's the problem you have there. See, let's say 98% of the Iranian people are great people, let's say, okay? But the 2% of the fanatics control the country, okay? So, you have to take care of them. And of course, they're going to, until you get rid of the fanatics and the nuts, you're going to continue to have these issues. It's no different than, some of the gangs in this country. When you have these things happen, they're not going to change no matter what deal's in place. They don't want a deal. They want to continue to create chaos. So until you get rid of them, and clean it out, you're going to have the same issues that you have. Yeah.
Totally get what you're saying there too. So curious in your thoughts on gold and silver at this point. They keep coming under pressure, especially the equities. Gold has been 4,000. It's kind of been that level that I've been watching. It's went down lower than 4,000 yesterday, came back up to 4,000 at the end of the day. And it seems like that's the support level that is being tested constantly. And silver just keeps falling. I mean, I think silver was at $55 last I checked, in 56 or 55. And so, curious in your thoughts on the metals.
Well, I like the metals in this area. Silver's 55, gold's 4,000. I think gold could go to. I mean, let's say go anywhere, but I would think if it goes lower, I don't think it can go much lower than 35 or 3,600. But I do like the 4,000 level. I do like the 55 level in silver. So I would certainly not have a problem buying it here. If I were going to buy it and hold it and store it and buy physical, I'd have no problem buying it here whatsoever. From a trading standpoint, again, I've been a buyer at 4,000 and look for it to rally off of that. But if I was going to buy it to invest, I'd buy it right now and not even think about it. And if you're afraid and trying to pick it lower, then take a percentage of what you want to buy a little bit. And then you can buy more either on the way up or on the way down. So you can average up or average down. But to sit and do nothing at these levels, if you're going to buy it, then this is the time to start.
Okay, so I'm curious in your long-term view on the metals. And I also have another question. So obviously, massive money printing, M2 money supply has been skyrocketing again. We have the Fed is saying that it's not quantitative easing, but it has been supporting the banking system and buying some of that debt and such. Their balance sheet has been increasing. You have war, you have conflict. I mean, Russia, Ukraine's kicking back off and such. It would seem that gold would be that safe haven that people have always referred it to being. And so, why do you think it's under pressure right now?
Interest rates are rising, right now. So that takes away some of the luster from gold. The higher interest rates gives people a place to put money now instead of, having to look for the inflation protection. I think that, again, gold ran too far, too fast, just like silver did. And as usually happens, markets overcorrect, And the overcorrection that we're seeing is what we're seeing now. And of course, it doesn't help that the equities are under some pressure because, of course, people will sell other assets to protect some of the crappier assets that they have because they think they'll come back. And that was one of the pushes down in gold as well. Like I said, I'm bullish gold, or I'm a fan of gold. I own gold. I'll buy more. Okay, and I think that there's a possibility. I mean, I don't think it can get to my original target this year was like 6,000. I don't think it can get there now. Now, obviously, anything's possible, but I think that if we can hold this 4,000 level, I think we can get back up into the fives and maybe a little bit higher than that.
Yeah, it's been interesting seeing like the central banks buying of gold has been increasing over the past few months, and then we had a lot of banks come out. They had these high targets. I mean, you had Bank of America and JP Morgan. I think they both had like $5,000-$6,000 targets and such. And I mean, even Morgan Stanley saying 20% gold allocation in your portfolio. What kind of signal did that give you when you saw like the big banks and everything coming out and giving these higher price targets and more of this kind of bullish sentiment on gold?
Well, I think that they were trying to push the prices higher so they could sell futures contracts against our holdings. The banks are kind of quirky about the way they do things, and you want to talk about potential spoofing and things like that. Listen, I came from the trading pits when the big banks had a buy broker and a sell broker, and they'd send a small order to one side of the pit to create a buzz, but the bigger order was the opposite. And it's the same way that they put out news. Big banks have their own agenda of why they're saying what they say. And normally that agenda is to help their own traders either accumulate and make some profit or get out of a bad position. So I don't put any stock into what any of the big banks say.
Okay. Got it. That's good advice. So if for the long-term investors that are looking 5 years down the road, where do you think gold and silver could be, longer term?
Oh, I think gold and silver will be much higher. I mean, 5 years from now, gold should be probably in the 7,000 level, probably 8,000. Again, I can't really focus. My first focus would be it has to break the next resistance level. But certainly, if we go year over year and the rise of gold on a yearly basis in history, I think that that's what we got. I think that they will continue like the equities. I mean, I'm very bearish to equities here, but 10 years from now, I'm sure we'll be up that average of 8.5% year over year.
Yeah. Yeah.
Okay. So that is what I'm looking at. And that is what I want to focus on is, if you're an investor, then make sure that you're investing, you're not using leverage, and you're not going to look at it every 5 minutes and watch the movement daily of what's happening, right? Again, we can't focus on what's going on minute to minute because your investment is a lifetime investment, not a minute to minute. So, and anybody who buys, for example, if you buy physical gold, you're not trading that. And if you're going to be forced to sell it, I assure you, you're not going to be selling it for more money. You're going to be selling it at a loss. So when you're investing, you have to have a different mindset and invest with money and dollars that you have, that you can hold on to, okay? And not put yourself in jeopardy to be forced to sell out.
Mm-hmm. How long have you been buying physical gold?
I've been buying gold since 1,000.
Since 1,000? Okay,
and I've been buying silver since it was $10.
Yeah. So you've seen like the benefits of holding long term.
Now, again, you have to, if you're going to play the market and as an investor, again, there's a difference between trading and investing. You have to be willing to go through the ebbs and flows of what the markets do, and you're basing your position on the long-term statistics of what the market is. And that's the market in gold has gone up year over year in history, and I don't think any reason to see that's going to change.
Got it. What's your take on the dollar? Where do you think the dollar's headed?
I don't know. I think the dollar's, probably headed a little higher here, but, I think right around par is where it's kind of stuck at. It's not really a great look. I don't think it's going lower for now. I think it's going to continue to churn around here. They try to put weight on the dollar because, there's the commodity selling and things like that, but that really, to me, doesn't mean anything. I think that you have to look at it as a perspective that a strong dollar is good, okay? And the dollar is still the reserve currency. So if I'm right on my assessment of what's going to happen in the market and what's going to happen worldwide, then the dollar will gain some strength because countries buy U.S. dollars as a form of it, as a safe haven investment.
Mm-hmm. What do you think about diversifying into foreign currencies? So I've actually been looking more into like the Swiss franc. Like, okay, why own the Swiss franc, and kind of doing some research on that, as well as like the Norwegian krone. What's your take on like other foreign currencies, and like do you diversify in foreign currencies?
Well, I trade them, but I don't invest in them. I mean, I trade the euro currency, I trade the yen, I trade the Swiss occasionally. But overall, I'm not going to invest. I don't want to invest in a government product.
Yep.
Okay. The best of the big bunch is the Swiss because it still has a gold backing to it. But the rest are all error. The fiat currency system is a scam system, in my opinion. So why would I want to invest and hold something that the government can control in a second? I don't like the currency markets in general because all they are is more debt.
Yeah, agreed. I was kind of looking at the Swiss during the 2008 financial crisis, and just looking at how much it appreciated versus the dollar. And so, I could see why someone would want to like hedge their dollars with the foreign currency that's typically more their government's more favorable towards, those that build wealth. I remember, I think they were trying to do a wealth tax or something, and it got repealed and such because the people didn't want that. Obviously, like you mentioned, like they still have gold backing. A lot of people move their wealth there and such, and gold is huge there. And so I could see how it could be like a more of a protection, if we were to go through some dollar crisis. Do you think that's accurate?
Yeah, I think it's very accurate. The Swiss is more of a safe haven kind of play. If again, it is against gold. So, and again, like I said, to me, those are trading vehicles. I'm not a big investor in those. I would buy them, hold them, sell them, but I'm not gonna count that as part of my investment portfolio because again, I don't like anything that is based on debt and based on government being able to print new money. Okay.
Yeah.
The Ponzi scheme of the fiat currency is not for me.
Yeah. Gotcha. What's your thoughts on Bitcoin these days?
I think Bitcoin's stuck between 60 and 65,000. I think, listen, I like it. I don't know it's going to run away and hide right now, but I like it. I think that it's got some potential. But right now we're just kind of stuck in this range. So, until we can, break out of this range one way or the other, I don't see anything to do here.
Do you think Bitcoin goes higher eventually? I mean, we had the ultimate bullish, the ultimate bullish kind of story, which was, we had the United States president show up to a Bitcoin conference, and you had government policies and laws being changed around it. So
I think that Bitcoin goes higher.
Okay.
I think that, again, I think it's kind of like the currency of the libertarian, free market, so I think it goes higher over time. I mean, you're seeing it widely accepted among a lot of places, even here in Las Vegas. Now the sports book are taking Bitcoin as payment. So I think that it's considered to be a real currency, and, we'll see. I mean, there's a lot of people that don't believe in it, but if you take the younger generation, all they know is digital, whether it's real cash or Bitcoin. They know digital, and there's a lot of young kids who made a lot of money in the Bitcoin world because they understand it.
Mm-hmm. Do you think the broader crypto market, are you bullish on that, or?
I mean, parts of it. I mean, to me, they've got to have a market cap of in the billions before I'd even think about it. I mean, there's probably out of the 13,000 different currencies, there's probably 10 or 11 that are good that I would look at. I mean, Ethereum, Solana, some of those, but overall, I mean, there's a lot of scams out there too, so I'd be very careful.
Yes, it's still the wild, wild west in some ways, with the crypto markets. You definitely got some coins that are pump and dumps. You got the meme coins and all of that. And some people are just like, I just rather not even touch it. And so, all right. So what other commodities are you looking at as far as, I know you trade multiple different commodities. Which ones are you most bullish on at this point, or are you bearish on commodities?
No. Last time we talked, I said I'd like the grains, and the grains have had a nice big move up. I still like the grains. I think they've got, we got some hot and dry weather, and I think, if the markets sell off, you're going to start to attract some of that new money. So I like the grain markets. Obviously, gold and silver are commodities. I like those. I'm a seller of cattle and hogs. That's about the extent of the commodities that I'll trade that are liquid enough for me. But I'm a big fan of the grain markets in here.
What do you think about the agricultural stocks? So stocks like Mosaic and others. Obviously you're talking about the futures, but the stocks like
Caterpillar, Mosaic, Deere. Okay. They're all good. They're pretty pricey right now. I'd wait for those to come in a little bit, but they're Mosaic's pretty cheap, but I think that any of the Deere, Caterpillar, Mosaic, Potash, any of those are something that I would look at to play.
Okay. Do you think that's the only part of this commodity run that really hasn't moved?
They were way behind the markets and have now started to move, and they've moved pretty sharply. So they've, corn, wheat's over $7 now. Finally, it was down in the fives. Beans are over $12. They were down in the low 11s. So we're seeing some pretty good movement.
Okay. What are your thoughts on the platinum group metals? All right, how you been looking into those?
I like platinum. I own a lot of platinum. It's been pretty disappointing recently. After the big charge it had, it's broken some pretty key support. It's right there at 1600 where it better hold, or I think it's probably going lower. So I would be very, very careful on that. But I do like it. Listen, again, I'm going to hold it for long term, so I'm not getting rid of it anytime soon. Right.
Yeah. What levels would you be buying at?
I buy it here at 1600. It's
1600.
A little low, but that's a level that that I like. I'd be willing to buy it there. I'd be well buy it at 1500. I've been buying it. I bought it all the way up and all the way down. I've owned it for years.
Yeah, I remember when platinum was below. I think it was below $1,000, and then we had a big, huge run in December of last year. I think it ran close to $1,000 in a month. So that was pretty.
It was up huge. Platinum made a giant move. It was from platinum went from 1,400 all the way up to 2,800.
Yeah.
So again, look, at one point, for those who don't remember, platinum used to be over gold.
Yeah.
Now it's a third of.
Yeah, definitely. I always mention this every time because I just remember growing up, all the rappers used to talk about platinum. They weren't really talking about gold. They wanted the platinum chain and platinum rings and everything. And so platinum was mentioned in a lot of songs during that time when platinum was over gold. And I remember a friend of mine, he had bought a platinum necklace, and then when the market crashed, he tried to sell it, and he told me that he didn't get as much as he paid for it.
That's for sure. That's anytime you're forced to sell, that's what happens.
Yeah, definitely. Okay, so well, Bubba, appreciate you for coming on the show, giving us your thoughts on the markets and where you see things headed. Where can the audience connect with you, ask questions? I know you have some live calls you do.
Yeah, I do a lot of live calls. They can go to go.bubbatrading.com and check me out there. And, I think I've offered before on your show before, but I've written 2 books on options, which I'd be happy to give the PDF files to anybody in your audience. All they have to do is email me at bubba@bubbatrading.com, and I'll send them 2 free books.
Okay. Options trading. Tell us a little more about that. Are you talking all types of options, covered calls, and all of that?
I don't do covered calls because that's a horrible trade, but I teach people how to do synthetic covered calls. And I teach them, we do my book. One of my books is on weekly options. One's on regular options. But I do a live call every Saturday and teach people how to trade options.
Okay. Are you just curious in your thoughts on options? Just really quick. Are you into like leaps? Do you think leaps?
I'm not a leap player. No, I'm into creating synthetic stock using shorter term options because the cost is so much lower, and I can control a lot of shares, with a little bit of money.
Yeah.
Okay. And I can actually teach people how to buy a call or buy a put for half price. Then it's posted on the board by using a combination of options to do so.
Okay. Okay. Yeah, I'm gonna definitely have to check out that book. You know, I trade a little bit of options here and there. I've gotten in and out of the markets. I've studied charts and everything, but I haven't like fully immersed myself into it. And so I think your book could be beneficial. So I'm gonna have to be sure to email you and get a copy of that.
You absolutely should, my friend.
Yes, yes. So you all got the information. Be sure to email Bubba to get a copy of those books, the PDF copy, and then also check out his website where you can join some of the live calls and see what trades they are making. And Bubba, appreciate you for coming on.
Darrell, thanks. It's always great to be with you, man. You got a great show.
All right, thank you. All right, you all take care.